Answer to your question that's keeping you from taking action today. Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason
Hot
Michael.
mics.
Welcome to the show. Jason Bible, Right Path Real Estate. This is a live show the Friday before Christmas. I drove to work and I thought it was like Sunday morning. There's nobody on the road. Nobody's going to work. There's deals to get done, folks. Welcome to the show. Today I've got a special Christmas shirt on, and it says, "You sit on a throne of lies." It's from the movie Elf. If you've seen Elf, Will Ferrell plays a human-sized elf who goes back to find his father in New York. And through his travels, he ends up at a local shopping mall where he works as an elf. And they have Santa come in. And Santa comes in to see all the boys and girls take pictures with him. But Buddy knows that it's not the real elf, or not the real Santa. And when he discovers it's not the real Santa, he screams at that Santa and says, "You sit on a throne of lies." This is great. Absolutely great. Today, we're going to talk about some lies. I love the market, especially markets that are relatively transparent from a price discovery standpoint. What do I mean? What is going on in Bitcoin? I love it. We could go back, if I had the staff like the Rush Limbaugh program does, we could go back and I could play quotes from the radio show from the last couple of weeks predicting the downfall in Bitcoin because of CBOE and CME introducing the futures market. We knew it was just a matter of time because there was no way to short the Bitcoin market. And guess what? As soon as they came online, was that a week ago, 2 weeks ago? Bitcoin's down 25%. And all of these, let's just be real transparent, morons have no idea what they're doing that have been recommending these cryptocurrencies for the last 6 or 8 months are now losing a massive amount of money. I love it. They should have never done it because they don't know what they're doing. Now, they may know how to trade it, meaning they know the technical piece where which button to click, but they have no clue what they're investing in. None. And it's become a complete bloodbath. And those people absolutely deserve it because they have no clue what they're doing. You should have never been in those positions in the first place. And that's one of those thrones of lies people are sitting on right now, and it's great. I love just the sheer precision and just the immediacy of that poor decision. I mean, it just smacks them right in the face. Oh, that was a bad idea. Yeah, it was a real bad idea. I fought tooth and nail with people on Facebook. Oh, you don't understand, Jason. This is the next thing. It's going to be so awesome. No, it's not. You don't know what you're doing. It's an illiquid asset that doesn't solve any problems at all. In fact, there's a story that came out. Now, we'll get to real estate here in a minute. There's a story that came out 2 days ago that the founder of Litecoin dumped all of his Litecoin positions. Think about that for a second. Think of it this way. If you have a company that just went public within the last 6 months, and then within those 6 months, the founder of the company dumps all of his assets, all of his holdings in that company, what would your confidence level be of that company? Yeah, that's right. It would be about 0. And he came up with the most ridiculous reason he did it. Because he's worried about a conflict of interest while working on the technology. So I want to make sure that I have no financial interest in what happens next. I'm like, you have got to be kidding me. It's got to be the biggest Ponzi scheme I've ever seen. And people are just falling for it. It's hilarious and it's sad at the same time. It really is. It's like people, they're doubling down on failure at this point. And you just got to sit there and watch. And you sit there and it's, you know what it is? It's like telling my kids, don't touch a stove. Stove's hot. Don't touch a stove. Don't touch a stove. Don't do it. Don't do it. And then, they go crying to mom. Guess what? The stove is hot. The stove is hot. You know, I hope the people who got into these things are not losing a massive amount of money. I hope it wasn't your last $100,000 or $1 million or $10,000 or whatever it is. But boy, that was stupid. It really was. I just, it's the see I told you so moment. I mean, and I've got another big one coming up in the show because the theme of today's show is lies, but I'm going to focus on two of them today. I'm going to talk about I call it the millennial lie. The lie we've heard about the millennials. And when I heard this first lie about the millennial, and the first time I heard about it was right after the real estate crash in 2008, before I got into real estate. And even then, when I wasn't in real estate, I heard this and I thought, this has got to be the most ridiculous thing I've ever heard. And then the second one I'm going to talk about is what is Right Path. We're Right Path Real Estate. I want to talk about what that actually means, what that is, where we are in the game of investing. Let's start with the millennial lie. And I want to talk about an article that was put out recently, produced recently. It's on Zero Hedge. It came out the 20th, which was what, Wednesday? Here's the title of the article. Exodus starts. Millennials ditch city life. Exodus starts. Millennials ditch city life. All right, let me explain the lie first, and then I'm going to tell you what an absolute farce it was for the last 8 years. Shortly after the housing collapse in 2007 and 2008, there were just a litany of articles written, surveys produced, research conducted about the future buying habits of millennials in the housing market. And I'll tell you right now, whenever somebody says conventional wisdom is right, conventional wisdom is often wrong. I mean, you could go down the list and most of it is wrong. In fact, it was interesting. We've got a couple of guys in our office. They haven't read The Millionaire Next Door yet. And so they're going through and reading it right now. And it is incredibly eye-opening to a lot of people. Backed up with a ton of stats and case studies and, I mean, just a ton of stuff. And so it's interesting to see, as people are being exposed to real data, what's really occurring out there as it relates to creating wealth in America. So all of these articles that were produced after 2008 basically said this: millennials are not going to buy houses to live in. That's it. It was suburbia is done. The housing market is done. It's turning into a renters market. In fact, millennials don't even want to live in the suburbs anymore. They don't want to live in a house. They want to live like a bee or a hamster. They want to live like a bee in a little colony, buzzing around, just one on top of each other, right? They want to live in an apartment that's 25 square feet, that's got a fold-out bed and really good internet. Like, that's what we've been sold the last 8 or 9 years. They're going to live in apartments forever. It's just apartments and rental houses. And they're going to live in these little communes, and closely to urban centers. And we're going to see this giant urban revitalization. Now, I'll tell you my conspiracy theory behind this.
2 minutes.
It was predicated by the commercial real estate industry, not the commercial real estate market. That's a little bit different. The commercial real estate industry. The guys that raise money for commercial real estate projects, developers, people that are responsible for those funds, construction companies. There was this huge lie. And it was a bold-faced lie the first time I saw it in '08. I'm like, wait a minute. You're telling me that the American consumer that's been consistent for almost 100 years now, in this one generation, is going to change how we view and how we buy and sell shelter. It was so ridiculous on the trend line, it didn't even make sense. But everybody bought into it. And it was an abject lie. It's a lie people have been telling themselves for 8 and 9 years now. Millennials aren't going to move into houses. They're going to live in these little B colonies, Class A B colonies downtown, so they can be close to all the coffee shops. They can be close to all their friends. And they're not going to have any families. They're just going to live in these little communes with their miniature little dogs and their iPhones and their Apple laptops. And they're going to live in 100 square foot rooms. And that's what they're going to do till they're 100 years old. And it has been slowly leaking out over the last 12 months. That is absolutely not going to happen. We get back from the break, I'm going to talk more about that lie and how that's going to impact single-family real estate. It's Jason Bible, Right Path Real Estate.
Mike's off.
Hey, Glenda.
We found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are you a realtor or seller that is concerned about the new TRID rules and
We
closing
are.
on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our
Thanks,
office
Michelle.
or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart?
I got to
And
tell
may
you,
have
Glenda, it was
foundation
pretty
movement.
funny last night. I was going to grab you after base camp.
It's probably not a question of if you have movement.
When Tom said,
but when.
"Hey, did you
Call
listen to the
Foundation
radio
Check
show this
for a
morning?"
truly
And I almost,
independent,
he was asking the question to you,
unbiased
and I almost said,
evaluation.
"I didn't even listen to the
Foundation
radio
Check
show
has been in
this
business
morning."
since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
As a real estate investor, you rely on your property inspector to determine the current condition of the home and your potential return on investment from an investor's point of view. Principal Inspections was founded by investor Jeremy Humphrey to do just that. Principal Inspections works from the investor's point of view, providing affordable, fast, quality inspections with information pertinent to investors while not clouding the report with unnecessary details. Principal Inspections will save you time and money. Call Principal Inspections, 832-684-5516, or online at principalinspections.com. License number 21264.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results if there's a better place to invest? The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
Call Jason at 713-785-1817 and look for us on Facebook Live at facebook.com/rightpathrealestate.
Hot mics.
It's Jason Bible, Right Path Real Estate. If you want more information on what we do in Right Path, go to rightpathrealestate.com. We've got free events. We teach people how to build income and wealth with real estate. We teach like what we call practical real estate investing. It's not some pie in the sky, late night infomercial, you're going to be a millionaire in 10 minutes nonsense. This is real real estate investing. And today we're talking about the millennial lie. And the millennial lie is these millennials, they're never going to buy houses. They're going to go rent apartments and live there with their little dog and their iPad and go drink craft beer with their friends and fancy coffee with their buddies in the morning and go work at, the bank that's 2 streets down from their apartment. Nothing could be further from the truth. Nothing could be further from the truth. Great article came out this week. I've been saying this for years. There is no the idea that the millennials are not going to move into a single family house and rent the rest of their life is absurd. It was absurd when all these studies were produced. It was absurd when all these articles were produced. It was absurd because it floated the idea that if I build or invest in multifamily, the market will never go down. The market will never crash. We're going to have an endless supply of customers. It's the same lie as Bitcoin, which I talked about at the beginning of the show. It's the same nonsense of, you don't understand, this is a new trend, and it's going to change the world. No, it's not. It's not. Millennials are not going to change. They're going to be just like every other American. The problem with millennials is all of the student loan debt they've been saddled with. That's one of the biggest problems with millennials. And that's a problem that will sort itself out as they age. Great article, Exodus Starts, Millennials Ditch City Life. The urban revival of America's core inner cities has been a decades-long failed experiment, as deindustrialization coupled with failed liberal policies have created a growing problem of inequality and violent crime. Middle-class advancement was once localized in the core of America's cities, but that is now not so much the case today, as those areas are labeled a barbell economy, divided between highly paid professionals and low-skilled service workers. What does this mean? Look at any major market. Houston's a great example. You get inside Loop 610. What do you get? You get either some of the roughest areas of town and coupled with the most expensive real estate in the city. Actually, in the state, if you really look at it that way. You have abject poverty leaning against some of the most wealthiest in the city. inside 610. It's inside the loop. You get both extremes. And millennials just can't compete in that environment. You've got some of the roughest areas of town in that area, and you've got some of the most expensive real estate. And in this article, they talk about reaching peak millennial. What does that mean? That means the population of millennials moving into urban areas has peaked, and from a demographic standpoint begins to decline. Now, rational Americans will understand why it declines and can almost pick the age at which peak millennial declines. Anybody want to guess? Do you think it's when they get married? Do you think it's when they maybe start thinking about having kids? And they look around these inner cities and go, wait a minute, where's my kid going to go to school exactly? Or, hey, I'm getting real tired of living in a shoebox. I'd like a yard. And why does my rent cost more than it would be for me to own a house in the suburbs? People ask us all the time, why don't you guys invest inside the loop? I'm like, I don't want to. I don't like that market. It's wild swings of abject poverty right up against incredible wealth. We had some friends of ours that moved down to the Heights, Houston Heights. They've got a crime problem. That doesn't really make it on the it didn't really make it on the open house. It's not talked a lot about on the open house that they're having at the new bungalow, right? But there's a significant amount of crime in the Heights, which is one of the up-and-coming areas here in Houston. We really shouldn't even say up-and-coming. It's there, right? We had some friends of ours that moved in down there, and their house was broken into a handful of times. And we're not talking about $200,000 houses here. We're talking about almost $1 million bucks. In some case, $1 million plus. Your house gets broken into once or twice in a span of a year or two, you've kind of had it. Time to leave. I'm going back to the burbs. Because you know what happens in the woodlands? Not that. You know what happens in Sugarland? Not that either. And that doesn't happen in Katy or Cypress. Or if it does, it's pretty rare. Have your house broken into for a handful of times just to have some moron pull a big screen TV that you could have bought on a Black Friday sale for $500 off the wall. That gets old real fast. And millennials are realizing that. Hey, it's cool to live downtown. My job's downtown. All the cool bars are downtown. All the neat restaurants are downtown. But after you get mugged a couple times and you want your kids to go to a good school and you live in something the size of a shoebox for $2,000 a month, you start to realize, man, this isn't really that great. And that's exactly what's happening. But I'll tell you the lie that the multifamily apartment industry has been telling since 2008. And that is, millennials aren't going to buy houses. They're going to be renters forever. And your multifamily property is going to be full of these tenants until they die. And nothing could be further from the truth. Tom and I have predicted for a number of years now, there will be a drawdown in multifamily. And it's going to seem like it's going to happen relatively quickly. It's going to all of a sudden go from, hey, I'm buying Class C assets at a 7 cap to, oh my gosh, at 98% occupancy to, oh my gosh, we're now at 50% occupancy over 8 months. What happened? And these millennials are leaving. It's just a matter of time. They're not going to sit here and enjoy downtown life. Because when you start a family, you can't live downtown. We had this conversation. I call them hot tub conversations. We were in the hot tub this week, and we were having this exact same conversation. Would we live in the place we live now if we had kids? And the answer is unequivocally no. Would not live there. But once you start having kids And once you have a dog, you can't live in a shoebox anymore. You can't live like a bee in some colony. You just can't. You get tired of it. You get tired of the traffic. I mean, I get you can walk around downtown and all that. It amazes me. I've got friends that live inside the Loop. And it amazes me that it takes them as much time to go from one small section inside the Loop to the other as it does for me to get from Sugarland to wherever I'm going to meet them at. And they've got a 15-mile head start. And you start looking around, you realize, what am I doing here? I live like a bee. I don't have a yard to kick my dog out of. My kids are going to have to go to a war zone of a school. I mean, the restaurants and bars and all that are cool, but I can Uber from the burbs to here. It's not that big of a deal. And then you look at the price of real estate, and it's incredibly expensive relative to the median income for that market.
2 minutes.
And when these millennials hit about 27, 28 years old, they start looking around and go, you know, I'm kind of done with this. It was fun for me and a couple of the dudes, me and a couple of the bros to share a multi-bedroom apartment. But I'm kind of over the frat life as I'm approaching 30. Time to grow up. And those millennials are starting to move out of the city, out of those urban areas. That's why that's one of the principal reasons we don't invest in those urban areas. The suburbs is where it's at. Do you know why the suburbs are so great? Because they've been great for 25, 30, 40, 50 years. The suburbs have always been great. It's great rentals. It's great flip properties. They're great for appreciation.
1 minute.
The crime rates are low. You don't have to worry about your property getting vandalized as often. It's easy to park. It's easy to drive away. I don't care what technology changes. When people ask us, oh my gosh, Jason, you don't understand. The world's changing so fast. It's changing so fast. How are you guys going to be competitive? We're in the shelter business. We're in the housing business. We're just along with the same trend that everything else is trending on. It has for the last 100 years. We get back from the break. We're going to talk more about millennials. Jason Bible, Right Path Real Estate.
Mike's off.
Investor loans offering up to 100% financing are still available. You just have to know where to look. Look no further than Noble Mortgage. Noble Mortgage is a full-service mortgage company that's been helping investors since 2003. Noble Mortgage offers up to 100% financing to investors that covers purchase, repairs, and closing costs. In addition to private money, Noble Mortgage offers conventional loans, FHA, and even no-income documentation loans for both residential and commercial properties. Call and ask about our 5-point guarantee, which includes...
Oh, that's good, Ginger. That's that private... You use private money to close it and then turn around and sell it, right?
Or visit noblemoney.com. That's noblemoney.com. Our team has over 50 years experience in the mortgage industry.
Morning,
Call
Dolores.
us today, 713-680-8100, or visit us on the web, noblemoney.com, noblemoney.com.
NMLS 292143, 8203 Willow Place Drive, Houston, Texas, 77070.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
Call Jason at 713-785-1817 and look for us on Facebook Live at facebook.com/rightpathrealestate.
Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. I'm debunking the millennial lie. And that is millennials. They're going to move into these downtown urban centers and it's going to be revitalized and they're going to live in these little apartments like bees. And if you're in the multifamily industry, hold on to this trend. It's going to make you millions. And nothing could be further from the truth. Doyle Myers, professor of demography at the University of Southern California, called the peak of the millennial population in major U.S. cities back in 2015, with the largest birth group of the cohort turning 27 this year. Myers said the critical age of 27 and above, that is the time when the millennial generation will participate in what we call millennial flight to the suburbs. Such a trend could be the final nail in the coffin for some American inner cities who are expecting the millennial generation to lead the charge in the revival process. As what we've learned from Myers, that may not be the case. Peak millennial. And they're just going to start moving on out. And why are they moving out? They're doing what every generation does. They get married, they start a family, and think about having a backyard and looking at school systems. The biggest lie in commercial real estate for the last 9 years has been invest in multifamily because the underlying demography of millennials says that they will live there forever. They're going to live in the 150 square foot shoebox for $2,000 a month or $3,000 or $4,000 a month in LA, and they're never going to leave. They're going to live like little bees. They're going to want to be within walking distance of all the cool places in town. Think of all the public works projects that have been that have funded over the years just for this sort of stuff. I'll never forget. I was down. When were we doing this? I was down in front of the GRB, which is our big convention center in Houston. And I hadn't been down in the GRB in probably 6 or 8 months. So we were there for the World Series. We were there for the ALCS. I mean, we were downtown. You guys remember back to October. That was a long month with all the playoffs and everything. Everybody was tired in Houston. By the time November came around, it was like, oh, thank God they won the World Series. We couldn't last another week because we were going to so many games. Well, they turned the front of the GRB into this outdoor area. They took in 2 or 3 lanes. And in front of the GRB, there was a sizable sidewalk there, probably 20 yards wide. So they went in and took in 2 or 3 of the lanes. So there's only 2 driving lanes between the GRB and is that Greenway Plaza, the park right there? Or something park, Millennium Park, or whatever it is. Oh, Discovery Green, that's what it is. Right there between Discovery Green and the GRB. What strikes me as so incredibly ridiculous about that design is there is underground parking underneath Discovery Green. So you've just reduced from 4 lanes to 2 lanes in front of a huge parking garage, which makes no sense to me at all in front of a convention center. Anyway, not to mention the fact that what they built in on top of those 2 driving lanes is they built this outdoor eating, hanging out, socializing area. They have this cool art, and don't get me wrong, the art around there is really neat. But they took in the two lanes of the street in downtown Houston, which already has got traffic problems. And we're talking about expanding an outdoor space in Houston, Texas, the place where this city would have about 100,000 people in it if we didn't have air conditioning. It was 75 degrees this morning, December 22nd, with about 900% humidity. I mean, it's awful even now in December. So let's build more outdoor space because the millennials are coming. No, they're not. They are absolutely not coming. They're here until they're 27. And then they look around and they got a bunch of their hungover buds, their bros, still on their couch. And they live in a they live in a shoebox with 3 yappy dogs. Of course, they can hear their neighbors' yappy dogs. They live like bees, and at some point they want to go, you know what? I'm probably going to have a family, and I feel like, I don't want to live in a dorm anymore. What am I going to do now? You know what? Those houses out in Katy, Cypress, Sugar Land, Tascasita, and Kingwood don't look all that bad. I think I'm going to move out there for half the cost. And when I want to go hang out with my bros downtown, Midtown, Uptown, Heights, whatever, I'll just Uber like a grown adult. This whole millennial thing in real estate, and they're going to change how real estate is bought and sold, is utter nonsense. They're Americans just like anybody else, even if they don't like being called Americans. They are going to move out of these cities, and we're seeing them move out now. It's that simple. The lie that you can invest in multifamily and make millions and millions and millions of dollars because all these millennials are just going to keep showing up in your apartment complex is not true. They're going to move to the suburbs. In certain markets, it started in 2014 and 2015. In fact, you know what's really weird? I bet if you look at price appreciation year over year and compare 2014 or 2015 to date versus the 3 or 4 years prior for houses in the suburbs with good schools, I bet you'll see double-digit appreciation. Anybody want to take a bet on that? In fact, what I'm willing to bet is you will see appreciation in those markets of single family double, if you compare it, double the rental rate or lease rate increases inside urban areas. In other words, the rate of growth in price appreciation in the suburbs is double the rent rate increases for urban multifamily. I bet it's a fantastic, classic inversion chart. Would love for somebody at CBRE to put that together. And then you know what I want you to do? Once you put that chart together, whoever puts it together, it doesn't have to be CBRE. CBRE puts out a lot of really great data. That's the only reason I mentioned those folks. Or Texas A&M Real Estate Center, if you guys are listening up there. Would love to see this chart. Just compare it to the major metros and suburban areas in and around those major metros. What will be fascinating is to compare that chart to all of the private placement memorandums investors like us have been getting the last couple of years about all the wonderful growth that's going to happen to urban multifamily. Because whoever did that research had no idea what they were looking at. Much like Bitcoin. When the futures market opened up, I made the prediction, guys. You're about to see a whole new level of price discovery. And it's going to fall apart overnight. It's going to seem like it falls apart overnight. And it certainly has. We're going to see the same thing happen in multifamily.
2 minutes.
These millennials do not want to live like bees when they get old enough. They don't care how close it is to the bar. They don't care about how cool the amenities are in the multifamily unit. They get to 27, 28, and they say, this is ridiculous. I'm an adult now. Time to leave. And we're starting to see that. The trend is starting. We are at the peak of this. So we're at the very tip of the trend line, starting to go south. So I'll tell you guys, just be real careful out there. Investing in all these deals, these multifamily deals, because folks are not going to live in these in apartments long term. Who wants to live in an apartment? I mean, let's really get down to it. Who really wants to live there? If you can afford a house for the same price you can afford an apartment. Now, don't get me wrong. Are there people? Absolutely.
1 minute.
But are there enough people that you can build an investment strategy around it? That's why single family is so great. Everybody either wants to rent a house or buy a house. If you got a choice between renting a house and living in an apartment, they're going to pick renting a house. If you got a choice between renting an apartment and living in a house, guess what? They want to live in a house. Every time. We get back from the break, talk about what Right Path Real Estate is. Jason Bible, Right Path Real Estate.
Mike Saw.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that.
Hey Ginger, was it good was it good education where you got paid?
Team at Benchmark understands the investment.
That's my favorite education.
What you need and when you need.
Getting paid for doing real estate.
Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single
you think tax plan is going to make higher price houses lose 20% value? I don't think so. I think at that price point, you're not going to see a lot of changes.
And let us show you what we can do for you at 281-569-4353.
Ginger, great question about baby boomers, and I'm going to wait till we get back from the break, and I'm going to explain what I think is going on there.
That's 281-569-4353 or online at benchmarkbroker.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
As a real estate investor, you rely on your property inspector to determine the current condition of the home and your potential return on investment. Principal Inspections was founded by investor Jeremy Humphrey to do just that. Working from the investor's point of view, Principal Inspections will give you turnkey inspections that are high quality, affordable, and focused on information pertinent to investors while not clouding the report with unnecessary details. Founder Jeremy Humphrey comes from a family of real estate investors. He started Principal Inspections for investors because as an investor himself, he experienced the need for fast, quality inspections with information directly pertaining to property condition and potential resale value. Principal Inspections will save you time and money. Call Principal Inspections, 832-684-5516. That's 832-684-5516. Or go online to principalinspections.com. That's principalinspections.com. License number 21264.
This is Business 1110.
Call Jason at 713-785-1817 and look for us on Facebook Live at facebook.com/RightPathRealEstate.
Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. A couple of questions here on the old Facebook feed. Ginger asked, what about the flip side of that when baby boomers start downsizing and don't want to maintain a house anymore? Will that kind of even things out in the area? It depends. What a lot of baby boomers are figuring out is that for them to downsize, it's going to cost them more. What does that mean? Real estate has appreciated so much over the last 30 years. Well, let's say they moved into a house 20 years ago, got the kids out of the house, they finally retired. They want to live in the same city they're in, but they don't want to live in the 2,800, 2,500, 3,000 square foot house. So they're doing a little house shopping, and whoa, have house prices shot up. Their paid off house or nearly paid off house, it will cost them more to move. So we're seeing a lot of boomers that are staying put because the cost of they got a paid off house. And in order for them to move, it will cost them more to move into that next house. Even when you price in all the equity that they've made in the house they're living in. That's a big factor right now. You're in a paid off house that's worth $300,000 for you to live in the area of town you want to live in a smaller house might cost you $5,000 or $6,000. They've already paid off one mortgage. Why do they want to pay off another? Some boomers will sell and move into apartments. That's certainly a possibility. But are there enough of them? I'm not sure. I don't know a lot of people that want to sell a house and move into an apartment. I just don't. Now, can I see them moving into, a smaller house, maybe more expensive house on a better side of town? I mean, that's certainly possible. But I really don't see that happening by and large. And then James asked, hey, what do you think is going to happen to higher priced houses because of the changes in the tax bill? I don't know. I was chatting with a couple buddies of mine. I got 2 friends of mine that are shopping in the million, right between like the 900 and $1.3 million, $1.4 million price bracket. We were chatting about this one day, and I said, guys, I can't imagine. They said it's not a big deal. They're not. Those buyers at that level are really not as price sensitive as it would be if it were at the $200,000 level. So is there going to be some impact? Maybe. Maybe not. We'll see. I can't see it having no impact. I think it's going to have some impact one way or another. I'll tell you what, I have enjoyed watching this whole tax plan come together. I've really enjoyed watching what Trump has done. This is I will do a show at some point on the masterful statecraft of how this thing all came together. It's been very interesting to watch. It really has. So, guys, I didn't get to go over what Right Path is. I wanted to do a longer explanation of that. If you go to rightpathrealestate.com, you can see all of our stuff there, if you will. We've got free events on Thursday nights. And we also do a weekend retreat where over 3 days, we share with you how we build our income and wealth in real estate. Let's go to rightpathrealestate.com. You can sign up there. I will not be here Monday. We'll have a best of show. We will be in studio Tuesday and the rest of the week. So thanks for listening, guys. This has been Jason Bible, Right Path Real Estate.
All right, Mr. Bible, have a good one.
All right, you too. Thanks.
Bye.
Bye.